What's up, folks? Guess who's back? Okay, so yeah, I guess let's dive right into the charts. Um, so let's go back to the daily real quick. Um, as you can see, we are still inside of this consolidation range. So what I'm monitoring right now is this premium wick and this current new week opening gap, and today's new day opening gap. Okay, show you that one in a second. So since we are still inside of the range, I don't think we're gonna break out to the upside or downside today. So yeah, it's just trading intraday liquidity. Um, so yeah, let's go back and drop down into the 15-minute. So as you can see, today's new day opening gap is here, and this one is still inefficient. Okay, so the current new week opening gap and the current today's new day opening gap, these are important for today's session, I think. Um, Ultimately, I want to see price reach down for this new week opening gap. What my game plan was for today was actually see a manipulation up into this new day opening gap and then reach down for these midnight overnights relatively equal lows and this new week opening gap. Problem right now is that we are already trading to the downside, so we we gotta see if price actually needs to trade all the way up into this new day opening gap. It actually would be even better if we leave it open, because that means that price is heavy and that it's weak and that it needs and wants to trade down there fast. So but yeah, initially the plan was to wait for manipulation after 9:30 to the upside and then target sell side liquidity on the downside. Oh, Michael K. Bro is in the stream. Yeah, bro. So I'm streaming 1.5 hours to 4 to 11 a.m. So 4 p.m. our time. 1.5 hours, and then I'm done. Then I'm going to eat something, and then we are ready. Yeah, let's. Okay. Ja, sag einfach nochmal Bescheid. Schreib einfach. Okay, so let's delete these levels for now and map out obvious liquidity pools. So we have overnight sessions lows, and we have, okay, maybe we can keep this on the chart and mark out buy side, pre-market highs, and we also have these lows right here, London low here. Yeah, let's see. Market opens in 5 minutes. Bro spamming likes. So that's it for electronic trading hours. Let's switch up into regular trading hours. That looks like this. So we have these relatively equal highs. That's another reason why I was expecting a manipulation to the upside into the new day opening gap and maybe up into these relatively equal highs. But yeah, we are going to open probably right around here, so we have a huge gap for today, for today's New York session. So I think we are going to see some speed. So important levels you need to monitor are these opening range gap quadrant levels. Okay, so price is going to use them obviously. So keep them on your chart, and let's see, time-based liquidity pool. So yesterday's PM session, the day before yesterday's PM session, and the PM session 3 days ago. So that's a significant low. That's also in close proximity to that midpoint of that opening range gap. So yeah, and this also aligns with the new week opening gap. Okay, so we have several things now coming together that we are aiming for. Let's go back to electronic trading hours. So London low is still intact. That's good. We have a good, relatively equal lows for right now as a draw to the downside. So 9:30 opening right around here would be beautiful. Then manipulation higher, and then we're looking for the trades after market structure shift to the downside and aim for overnight lows. And terminus is new week opening gap. Okay, so not too complicated. That's a game plan, and now we're going to see if it pans out or not. Let me check real quick if the YouTube stream was working properly. Um, so 2 minutes until New York Open. Okay. Um, well, give me a second. Okay, so 15 seconds until market open. Let's see. So 4:14 p.m. yesterday's close is right around here. So we have a huge opening range gap right there. So you would definitely want to monitor. these levels. Okay. So manipulation to the upside also aligns with the midpoint consequent encroachment of that opening range gap, which is a 70% likelihood that it draws up into that one. So full gap closure would be right here. We have minor lows. Oh, we are on the 5 minute. Let's drop down on the 1 minute real quick. So we have sell side and buy side. I gotta be honest, I want to see lower prices, and reaching up there would be kind of too, that wouldn't be manipulation, that would be too far of a move. So yeah, maybe these minor highs here, that would be a good buy side liquidity pool to manipulate. So if we break lower below London low, that will mean retail trader that went short trail their stop losses from here down here. Okay, so yes sir. So now buy stop orders are resting above these relatively equal highs here. So we could see a manipulation up into these highs to take people out that are already short, take them out, and then reveal the real move to downside, which is the draw overnight lows and the new week opening gap that is not on the chart right now, that I told you 5 minutes ago to keep them on your chart. I have it on another screen, so okay. So let's take off the indicator and delete these daily wick levels. So I have all these levels on the screen, not on this one obviously. I want to keep that nice and simple, but yeah. So we jump into lower quadrant. Maybe you already have our first percent for value gap. I guess that's a significant displacement right here. So we can take this one as the first percent for value gap. Okay, so important one. So minor by side. If that's your model, you could also take along from the first percent for value gap up into that midpoint. But yeah, I don't really trade this model very often. I don't know why. It's oftentimes it's against bias, and I want to trade with my bias. So as you can see, I'm expecting a manipulation to the upsides, and that aligns with the model that ICT taught us, where you trade towards the midpoint of the opening range gap in the first 30 minutes. But bro, I don't know. I'm like trading for 1.5 years now, and I think I'm not in a position right now where I can trade the market up, down, like every move. So I want to just take one real good move out of the market, and I'm fine. Maybe later on, when I have more experience like ICT, we can take this trade. Yeah, anticipate the manipulation. Okay, yeah, we're right. We take this one, take this model, then we expect a reversal. Um, After this manipulation to the upside, and then take a short and short towards these lows. Okay, so that's possible in the future, but yeah, nothing for me right now, at least not yet. But I mean, I guess if you're confident and you have experience and you've been trading for more than, I don't know, like 2, 3, 4 years, I guess you could do that. Stop loss below order block mean threshold. Okay, that would be your entry. I mean, we actually, yeah, that's my trading drill account. Okay, that's the account that I'm like practicing every day, where I take these kind of trades. Okay, I'm not taking that on a main account, main paper trading account, but yeah, it's like for practice. Yeah, if you can see, for example, well, we can turn on the executions. I practiced today in the London session. I wanted to go long and aim for the new day opening gap. I got stopped out at break even. And then I took the reversal, or not reversal, but I knew, okay, now we have a deeper retracement because we also took minor buy set, and I also monitored some opening range gap levels. So I was confident that we see a minor retracement now that I can profit off of from. And yeah, that's actually what I did. Entered at the order block, open perfectly, added to my position. Oh no, that's the stop out. Here's the entry on the order block open level. First entry, second entry inside of the fair value gap on a 15-second chart, and then first profit fair value gap, second profit sell side liquidity. Yeah, had a little deeper retracement, and then I tried once again to target new day opening gap, stopped out at break even. So I'm up on my practice account. Like, yeah, as you can see, 90 bucks for today. I just reset it every day, and yeah, just practice on a daily basis. So yeah. Um, let's see. Let's see how. Okay, let's just delete these opening range gap levels for a second. So we have first percent fair value gap, and seems like price is now inversing that fair value gap. At least, okay, it has not closed below it yet. So as you can see, we were not able for now to trade up into the midpoint of that opening range gap. Okay, so that's indicating weakness. Okay, so failing to trade up into premium arrays, which that obviously is, so opening range gap, that's a premium. Okay, failing to trade up into it, that would be even showing, yeah, more weakness. But like ICT says, you can only expect real significant moves after a liquidity rate. Okay, yeah, we have relatively equal highs here. We rated these ones, but these are only minor ones. I mean, that's okay. We could use these ones, but to disrupt people who are already short, I think that would be a beautiful relatively equal high to yeah, manipulate, to see the manipulation. So yeah, that's not quite a manipulation right here. Of course, that's minor manipulation here, but that would be the real one. So yeah, I guess now that we reversed the first percent fair value gap, and we, yeah, we have a market structure shift. I think we leave these ones intact. If my bias is correct and we are in fact bearish, we leave these ones intact, and we are now heading to the sell side. So London low is taken. This low also. So, man, I really wanted to see these relatively equal highs get taken. I mean, it is indicating weakness that we were not even able to get up in here. So smart money doesn't want to offer a premium level. So, bro, why is this always? Huh. Okay. Let's see, what is Dow doing? Dow is also moving lower. S&P 500 is moving lower. S&P actually, yeah, okay. So NQ seems to be the weakest one. Oh no. Yeah. Yeah, kind of the same. So yeah, let's okay. Low number 1, low number 2, and new week opening gap. There you go. Yeah, I guess my bias is correct, but bro, that's displacement. Bro, what the fuck is this? Okay. Draw already delivered. New week opening gap incoming. ICT twitting twittered right now. Video rendering, and he absolutely, bro. Oh, that's crazy. Okay, so ICT took shorts in here. Okay, bro. Come on. Yeah, okay. Manipulation. That was the manipulation. Like I told you, I wanted to see these relatively equal highs to be manipulated. ICT was content with these ones and took several short opportunities in here, and he's using this wick, this value gap. Okay. What the fuck, bro? That's insane. Yeah, whatever. So I don't know why TikTok is again showing live restrictions. Your live. Bro, I don't know why TikTok has a problem with me. Bro, I'm not telling you that you should sell or buy, okay? I'm not telling you that. I'm just sharing my opinion with you guys. So now the problem is we already have taken our sell side, okay? If we would have seen a retracement from here, I would have taken the short and ride it towards sell side. Now we have taken sell side already. So shorting right now seems to be not the smartest decision. Bro, TikTok, I don't. What am I doing? Okay, so bro, how is he doing this? Okay, now that I'm thinking about the manipulation aspect, we had relatively equal highs here, and we manipulated them. So we already had manipulation with this retracement. Trade down lower, relatively equal highs, manipulation. So no reason to also again manipulate this high right here because we already manipulated these highs. So retracement up into fair value gap. Also, we have the breaker here, respect to the breaker. Okay, yeah, I didn't. Okay, fine, I didn't really look at the market structure. So breaker, now this makes sense. Fair value gap, breaker. But nevertheless, maybe okay. Let's pull up the 15-second chart. So first presented order block, we respected this one. Was not even able to get up into the fair value gap, so maybe we could, if we get another run up high into this order block, we could short it down into the new week opening gap. But where's I guess. Again, bias delivered perfectly as I outlined, but without me, bro, that also already happened during pre-market session. We had relatively equal lows, beautiful, relatively equal highs, rated relatively equal highs. We're not able to trade up into new day opening gap. I had a market structure shift, and I was waiting for a retracement up into this inverse fair value gap. Bro, it never came, and it just dumped without any retracement. And I missed this beautiful trade right here, and again we missed this beautiful trade opportunity right here. I mean, we didn't get, yeah, new week opening gap delivered, so shorts are not an option anymore. We delivered our second draw, okay? So selling in here right now would be selling in a premium, selling in a discount, and I don't want to be selling in a discount. So um, yeah, bro, I always come out and live stream. I tell you guys what is going to happen or what I am anticipating. This happens, okay? Now I gotta be honest. I expected these highs to be taken out. So I was expecting manipulation higher. I told you, yeah, that's a manipulation also. That would be enough of a manipulation, but I was expecting these relatively equal highs to be rated. And what I was saying is we want to see manipulation higher, and then the real move reveals itself towards these relatively equal highs and this new week opening gap. And guess what happened? But without me. So yeah, maybe in these type of conditions we should employ some more aggressive entry opportunities. For example, maybe just enter as soon as price trades below this first percent fair value gap. And we have these little retracements. Maybe I had not enough conviction to already be selling in here because I wanted to see these highs get taken out as a manipulation. Um, yeah, so done. Bro, it's kind of frustrating if you just really predict everything and then you just are not part of the move and you just watch that happen and you're like sitting on the sidelines. Mm, so we still have an hour left. It's 10 a.m. right now. So, I mean, now we have relatively equal highs. Bias has already been delivered, but maybe can reverse now. Since I don't, I guess we are not leaving the consolidation range today. So I guess bias was correct. Yes, we were drawing down into new week opening gap. Now that we did, we could see us coming back into the range again. So high to low, midpoint equilibrium would be here. So we maybe could see another run up high into buy side. Um, but that's not actually following our game plan. So are we going to do it? I don't know. The major move that I was anticipating already happened. So yeah, kind of difficult. What are we doing right now? Hmm. 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 Um. Let's see. Let's go back to the 50-minute chart. So I mean, this is still inefficient, right? Whenever you see like a new day opening gap or in general like a big inefficiency on a 15-minute chart, something like this, where you okay, you have wicks, but you have not a body laying on top of the inefficiency. So in other words, this is still inefficient, okay? So that we fail to trade up in here, that showed weakness. And we fail to trade up into minor buy side, also weakness. We fail to trade up into the opening range gap. Midpoint, also weakness. So everything was indicating low prices, as I was telling you and as I was anticipating. Now we've seen low prices. Look how the body's respecting the new week opening gap high. Um, hmm, yeah. Bro, game plan already been delivered. Hmm. Hmm. Yeah, I gotta be honest. I don't know. I don't know. I was not expecting that move that early. Yeah, we actually did all I was expecting within the first 30 minutes of trading. So that was fast. That was fast. Yeah, I would say let's just wait. Maybe we get some relatively equal highs or lows that we can target after 10:30, or yeah, maybe within the 10:50 to 11:10 time macro window, time window. Um, yeah, man, I don't know, bro. I kind of wie läuft's? Bruder läuft top. Um, okay, we gotta speak in English. A friend of mine is asking how it's going. So I actually anticipated all of this move right now, but I was not able to be part of that move because it was kind of moving too fast. I was expecting that move lower, but it was too fast for me to enter and to um, employ good risk management. So yeah, bro, why are you on TikTok? You gotta be working, bro. uh, hmm. So again, guys, since our bias has already been delivered, unfortunately, we were not able to be part of that move. But yeah, that's sometimes the case. So don't be frustrated. Just be content, be happy. Your bias was correct. You read price action the right way. So yeah, just sit and wait. Wait for the next opportunity. If you get one, if not, that's totally fine too. So um, yeah. Maybe let's go to the 15-second chart and we can review what happened already. So that's the business right here. We have this first percent for value gap. So yeah, on the 15-second chart, we had that retracement up into the first percent for value gap. But on the 1 minute, yeah, I was not looking, unfortunately, I was not looking on the 15-second chart at the time. I was still, yeah, contemplating if whether or not we are going to take out this high first or if these highs were enough. I wasn't sure. So, yeah, there it is. Can we see lower prices? Even lower than that? Seems like price has no interest as of right now to okay. Interesting concept that ICT taught not so long ago is first presented fair value gap is a busy. So now you don't only want to be watching the first presented fair value gap that is a busy, you also want to monitor the first presented fair value gap that is the contrary. So first one is busy right now in this case, so we want to monitor the first one that is a Sibi, and that's this one. Okay, so we are respecting this Favati gap once and twice. Body's closed below the lower below the midpoint, so that's weakness. That's why I was saying, yeah, okay, maybe let's look for another sell side target, because it seems like price has no interest to get up higher, and instead wants to maybe seek lower prices. So we have the midpoint, we have the midpoint here, and this low is right at the midpoint. Okay, so that's that's probably the target if we are in fact looking for even lower prices. I could imagine price running towards that low, because that's also at the midpoint of the new week opening gap. So yes, I guess we have a plan now. Now we have to wait for time to align with price. So I guess we can delete the opening range gap levels. So SP 500 is moving higher. It's above these highs right here. Dow is also moving higher. So NQ is the weakest one of all of the three averages. So I have an idea. I guess for this entire New York session, okay, let me think. We have two options. Option number one is price wants to seek even lower levels. Okay. In this scenario, we want to see price stay below this first presented fair value gap. As long as price stays below this first presented fair value gap, and respects this another first present fair value gap, as long as price doesn't close above it here, we want to seek lower prices, and that low right here, we may see price go lower and take out this low and go even deeper into that new week opening gap right here. Okay. Second option, which is not which also is yeah, a valid option. So due to the fact that we are in consolidation type conditions, we could see, I could imagine price getting into the range again, because we comparatively we had a huge move to the downside, reached our objective. So now that we reached our sell side discount objective, in these type of conditions, it's likely that we see a retracement back into the range. And because of these current market conditions, maybe that's the more maybe it's more probable that price is going up higher again, back into the range, and also trade into this opening range gap that is still unfilled. Okay. Normally, if we weren't in these type of high resistance consolidation type market conditions, I would rather want to see price seek lower prices. But I'm not quite sure. We have two options, okay? Respect these fair value gaps, this green one and this one, and seek lower prices. Option number one. Option number two is if price is able to close above this fair value gap, that's still permissible as long as we are still underneath below this first percent fair value gap. That's okay. As when we close above this first percent fair value gap, then definitely we are going higher and seek higher prices and fill this range in here that is still inefficient. So we have two options, and we have clear if-then statements, okay? So I would favor that we seek lower prices further down into the new week opening gap, and take out the sell side liquidity sell side that's kind of overlapping, isn't it? Also, first presented auto block, beautiful. Keep it nice and simple. Yeah, it hit that new week opening gap. Uh am I waiting for the macro or am I shorting this one? Uh, I don't really like this one. Yeah, that's not my main model. My main model would have been entry in this fair value gap or first percent fair value gap. So I don't really like trading after my bias has already been delivered. Okay, so what I was expecting has already taken place. So internally, I'm debating whether or not I'm sitting still or trade in the macro time window 1050, because taking a model that's not my favorite model while bias while the target has already been delivered, while we also are not in the key time window, it's 1024. Yeah, silver bullets, okay, but nah, I'm waiting. That's not something I want to risk anything on. Also, enter here and where's your stop loss? Safe one would be here. I don't risk no $100 on a model that doesn't really look too good. Stop loss right here. Yeah, you could argue to put your stop loss right here. That's fine. 33 handles. Maybe I would do something like this. But I'm not really trusting this one, so I'm not taking it. And as you can see, price. Let's see. Let's just take with this one, okay? I'm not taking this one because it's, I don't know. No, I do know. First reason why I'm not taking this, bias target already has been delivered. We are not in a key time window. It's 1025, okay? It's not 1050 or not an opening range. Yes, it's silver bullet. Yes, you can take it, but the probability that you get sub out is higher. And third reason, already missed my model, and every time I miss my model and then take another entry, yeah, that usually doesn't end up too well. As you can see in yesterday's live stream, same thing, was even better. I expected the manipulation to the upside in yesterday's live stream perfectly. Panned out, kind of looked like the scenario in today's kind of looked like this had more or less the same market structure like this, and I was entering in this move higher, entering at the order block, which was still valid. Was not my model, but was valid. But I didn't notice that we already have taken out relatively equal lows. Uh, yeah, I didn't see it, and that's the reason why I got stopped out. And price was retracing even further and retraced up into the first percent Fabati gap. In this scenario, um, we didn't. We stayed inside of this fair value gap. Actually, look back, review yesterday's trading. It really looks like this. Manipulation to the upside, 30% fair value gap, move lower, market structure shift, nice fair value gap, trade up into it. That was my model. I didn't take it because the risk was too high. I had to risk like $40. My stop loss had to be like 40 handles. 40 handles, so I would have been risking like $80. That was too much for my model. I want to risk no more than 50 or $60 at most, but 50 is good. So stop loss was too big. Didn't take my model here. Delivered my target, or one target. Oh no, actually it didn't deliver it. Retraced up into it before, and yeah, we witnessed a deeper retracement before the target was hit. So yeah, got stopped out yesterday. Just reviewed the stream. And seems like today this one is panning out. Maybe. Which is fine. I stick to my rules. And I'm fine with that. I'm fine with missing this one, okay? I'm not mad about it or whatever. I'm still not mad about missing this one, but it's kinda. Bro, again. Are you kidding me? For real. Shit happens. That's trading. So, yeah. Hmm. I guess this actually is a trade that we could take. So let's delete the new week opening gap. Bro. Bro, market is price moving too fast today. I don't know. That would have been your only like opportunity. Look, I don't want to be selling while price is moving to the downside. I want to sell when price is coming up higher, okay? So I don't sell no inverse fair value gap when it's trading outside of it. I want to wait till price trades up into it and then I sell. Okay, I don't want to sell while my price is moving lower, okay? So in my opinion, here there's no retracement, so that was not really an opportunity to get in, to get or to participate in the trade. So yes, target has been hit. That's untrue. Okay, it could have reversed on us. That's no, I won't take this. Okay, move a little lower, further into the new week opening gap. Now it could have reversed or went lower, whatever, consolidated a little bit, respected this one, okay. As long as it respects this fair value gap, I want to see lower prices. Okay, it moves down lower. Was not willing to take this trade. Bro, it's kind of weird to trade during the daylight saving time shift period. So America already had the daylight saving time shift, but in Germany we didn't. In Germany it is like end of March or like in a week or so. I don't know the exact dates, but it's like 1 or 2 weeks later. So normally in Germany the New York Open is at um 3:30 p.m. my time, German time. But now it's at 2:30, so 1 hour before. And in this 2 week time window, price is kinda, I don't know, acting a little. I guess maybe ICT said at one time you have to expect price to be a little bit off, expect precision to be a little bit off, because normally, man, bro, I'm like trading for 2 years now, 1.5 to 2 years. Yeah, 1.5 years. Um, and I have seen this scenario several times, okay, multiple times. And usually you see this move happen during the 10:50 to 11:10 macro. So again, it's kind of early that this move happens, and also this move. Um, Maybe it's also um, due to the geopolitical upheaval and stuff. So market is being manipulated a lot. So I guess that also is part of it. But yeah, it's just an observation. I don't know if you guys can resonate with what I'm saying. Hmm. Sell side is in striking distance. Bro, again, shorting here is, it's too close to the target, bro. It's too far in a discount. You don't want to sell in discount. I mean, obviously it can pan out, but the chances are not. Probability that you get stopped out is more than I'm willing to risk. So Whatever, this is also panning out, bro. Oh, now I'm mad, boy. Okay, target delivered. Um, okay, just for myself. I'm just talking to myself right now. Okay, so mm, missing that one. Okay, fine. Write if then statements. If price respects this level and keeps it lower, you want to see lower prices. Okay, correct. So this is like mm, that's like the main character in the role in the movie. Okay, this candlesticks open and close um, is significant. Okay, we see an obvious displacement lower, taking out this low, also being the first SIBI Favali gap. So that one is significant. Try to trade up into and even higher, failed. Respected midpoint. Lower, retrace higher, failed to go to the midpoint. Lower, trade up into it, trade up into the midpoint, but body's closed. In the lower half, like I was expecting, if one price wants to seek even lower prices, it should respect this fair value gap and should not close above it. And it didn't. So therefore, we look for lower prices. Okay. Now, price leaves this fair value gap. The bodies tell a story, the wicks do the damage. And the body is telling what story? It's weak. It wants to go lower. Okay. Order block. Oh my god. Hell no. Price respecting the order block. Fair value gap. Silver bullet time window, okay. No macro time window. I demanded a macro time window. It didn't give it to me. Instead, we have a normal silver bullet. The fuck? Okay, so I mean, that's a valid stop loss. This one is protected by the order block open. Fair value gap, so we have two PD arrays protecting our stop loss. And do we have another one? We have this inverse fair value gap. Yes. So we have actually three pity arrays that would have protected our stop loss. Okay, so actually there, no, the reason why I didn't take a trade, I was saying, okay, and the reason number one, already delivered our target. Yeah, fine, we did that. But we now, or then, we created if then statements, and these if then statements told us lower prices. So the reason that we already delivered target kind of goes away because we have a new target, sell side, because price is proving to us that we want to go lower. So we have a new target. So that target that we hit this sell side, the overnight session sell side, that doesn't matter anymore because we know, okay, we are probably going to see lower prices. So that reason is no reason anymore. What else did I say? It's not my model. It's not my main model, yes, but it's a continuation model. Now, is a continuation model in this condition, in this daily range that we are in right now, is it likely to pan out? Actually, rather not, because we are not seeing recently in this daily consolidation range, we are not seeing um, we are not seeing like the word escapes me. We are not seeing like a continuation one run. We always see one quick move or one big move like this one, and that's it. And then we go back to the range and then we consolidate and do BS actually. And this is the first time that we had a continuation. So yes, that's a valid trade normally. Usually in low resistance liquidity conditions, that's absolutely also my model. I have like a turtle soup type market structure shift, first percent fair value gap model. That's one of them. And second model is continuation model, and that would be the continuation model. But like I told you, we are in consolidation on a daily, so we are less likely to see, not sufficient. What's the word that I'm looking for? Yeah, basically, we're not likely to see continuations. In this case, we did. Can we be mad about it? Actually, not. Did it pan out? Yes. Is there a day tomorrow? Yeah. Is there another trading day tomorrow? Absolutely. Is there a reason to be mad? Actually, not. So, done. The reason why I'm mad is not because I missed these trades. It's like in general, oftentimes, not even often, it's like 70-80% of the times, my bias is correct. I read everything perfectly. I have the right if then statements, but I'm not executing on them because there's still some uncertainty in my head that prevents me from taking these trades. Yeah, that's a problem. I demand price to be like perfect, but it's not always perfect. It's not you don't always get the perfect retracement into it and get an entry. No, you have to deal with what you get. And these types of market conditions, you have to maybe employ more aggressive entries and other entry mechanisms. And maybe I need to just adopt and yeah. Okay. So bias for the next session. So for the next session is the lunch macro. So since we didn't trade up into the midpoint and we mainly saw price moving lower without taking any buy side, it's a typical scenario where as soon as lunch macro starts 11:30 to 1:30, we will see a reversal because everybody who has been profitable during lunch and hasn't taken profits yet, price is going to reverse on these people who have their stop losses above this high and above these relatively equal highs. So during the lunch macro, I guess that's a draw here. So 11:30 to 1:10 draws upside, or at least these relatively equal highs, at least. And I guess that's enough. Reversal if you catch a trade. Not saying you should buy or whatever. I mean, what I'm saying is, if I'm seeing a market structure shift, a nice little displacement, retracement down into this into the displacement, I would ride it above these highs, and maybe look for the first percent fair value gap as a draw. Of course, it could go further into the opening range gap that is still unfilled, and these buy side liquidity pools right here. But yeah, I guess the move up in here is enough to be profitable and to be content. So it's 10:50. Taking out sell side, traded down into new week opening gap midpoint, current new week opening gap. I mean, that's also for a perfect reversal point. Yeah, I guess that's it for today, guys. I hope you enjoyed it. I hope you got something out of it. I hope you learned something. And if not, you were at least entertained. So I guess I catch you tomorrow. Same time, same asset. Yes. I catch you in the next one. Be safe, folks.